Hello. So now we will learn about price to book value ratio. In previous class you learned about EPS and PE and you got to learn few concepts how to calculate them. Here also I have explained already about what is book value, but then this time we will calculate book value of certain companies from both per share perspective as well as the whole company book value. So let's first understand what is this ratio means. So this ratio means that you want to know how much premium you are giving for one company at that specific current market price. So let's say today's stock price is 800 rupees for one company A, and the book value is 400 rupees of that company. So you are paying 2 times of the book value to buy that one share of company. Let's say book value has not changed, but the share price has changed, and this is now 1200 rupees after, let's say, 10 days. So you are paying 3 times of the book value, and this is something which you always want to see, that how much premium, how much more money I am giving to buy this share than their actual net worth. Yes, actual net worth I'm talking about. So let's jump to screener and try to calculate few things the way we did in EPS and PE ratio. So let's say this time we want to do it for a company, Reliance Industries. Now, first of all, we already have book value displayed for this Reliance Industries, right? And the current market price is already there. So very easily, if we want to calculate price to book value, how we can calculate is, we can use 14 CMP is 1413 rupees. Book value per share of Reliance is 639. 639. It is actually 1430. So price to book value, if I have to calculate here, we can say that (2.23 times you are giving to buy Reliance at 1430, right? So if you see that independently, can you go and take any decision just looking at the price to book value? I would say it's very difficult to do. So within the same sector, you have to see that what is the price to book value ratio of other companies, and within that sector where exactly Reliance stand. So this is what you need to always find. You cannot because there are asset heavy companies where price to book value will be not that high. If you go and check the same thing for TCS, which is not a asset heavy company, you will see that price to book value is far high, far more, 1837 to 24, 1837 divided by 224, you can see TCS is trading at 8 times of its book value. So can we say whether Reliance is a good buy or a TCS is a good buy? According to that, we do not have to pay higher price for any stock. We will say that Reliance is a very good stock in comparison with TCS. However, it is not correct. Just on the basis of one ratio, which is price to book value ratio, or the ratios which you have learned, you cannot decide that which stock is good to buy at this price. But we need to learn them. We need to learn them because they all have significance at different places. This is what I told you that I'll explain in next class, which is class 31, and this class we will simply learn and have clarity around how to calculate certain ratios. So you can see that these are public information, both current market price and book value, and then you can calculate price to book value. I can end up the class here, but then I wanted to show you something more. What I wanted to tell you that why not let's try and understand that how this book value is arriving here. So book value of a company is the net worth of a company, you can also say. I'm talking about not book value one share, but book value of the complete company. Now what is the net worth? Net worth is something when a company is made up of assets and liabilities. company's promoters start with certain funds, then they make a lot of profit, that becomes again shareholder equity. This is all things I have explained you already. Now then they raise fund through debts also, and they create assets out of debt. But let's say if this company want to liquidate everything, then what they need to do is they have to pay off all the debts and they have to sell all the assets, and then whatever is the money which is left with the firm will be called the net worth of the company. Total number of share, if we divide it by, we can say that that is the book value per share. So let's say we calculate book value of per share of Reliance Industries looking at the number from screener.com or even Money Control. So let's say we will stick to Screener. So first of all, market, we will come in the same way we did in the last class. We will come with the number of shares of Reliance. Current market price 1430, market capitalization is this much of crore, right? So we have to format it. So can we say how much is the number of shares? Well, number of share is this. Now, as I said, we have to first find the net worth of the company or the book value of the whole company. Well, book value or net worth of the whole company, we can simply say that total asset minus total liability. Obviously, you do not have to include intangible assets like the brand value or employees or the management and so many other things which the strength which company has developed. They are also the asset of the company, but they are intangible assets. So you cannot take in account the intangible asset. So if we are not taking intangible asset into picture, and we simply have to pay off all the debts, and if we are paying off all the debts and we can pay it by liquidating all the assets, so we can also take in account the shareholder equity only, which I have explained you that the total. So instead of getting into that deeper calculation of finding all the assets and the liabilities, which will actually result in the reserve and share capital only, because if you see, this total asset is the combination of all assets, total liability is the combination of borrowing, other liabilities, and reserve and share capital. This I have explained you. So instead of going into that deeper calculation, we can simply pick up this reserve and surplus and share capital. Let's pick up and try to see. 399, we'll write here 399,034, and the share capital 6339. Can we add both of them? Yes. And for time being, we can call that this is the net worth of the company, because we have added reserve, surplus, and share capital. So 45,373, and then since it is in crore, 7. So this is the net worth of the company. So it gave you a certain clarity also that what is, or maybe I can say that you got reminded here. So divided by number of share, if we calculate, this comes down to 639, and this is the 639.46 is what Reliance Industry is showing its book value also, right? So what you learned here is basically that net worth per share of Reliance is 639, but if you want to buy it, you have to buy it at 1430. Whether it should be 2000 or 1000 the current market price, which will be the ideal value when you should buy. Well, nobody want to buy at 2000 rupees, but you may certainly want to wait and see whether you can buy at only 1000 rupees. Well, that price may never come also. So there are so many dynamics where we cannot say only on the basis of the multiple of book value to current price will give you a correct picture to understand whether a stock is undervalued or overvalued. Similarly, as I explained you about EPS or PE, that independently you cannot say that only low PE stocks will be good stocks, right? So what you can see here is independently, if you really want to make some use of price to book value, what you can do that you can look it within the peers. So within the peers, when you will see that Reliance is demanding the highest premium on its share. Why? For that, obviously you need to go and see so many other factors which you have learned, like what is the compounded annual growth, what is the compounded sales growth, how good in the quality front this company is. But certainly if we only look at price to book value, we can see that Reliance Industries is costliest among all. Well, how to interpret price book value and in which sector it is more relevant is something again we will learn into class 31. For this class, I would suggest you that you go and check price to book value as an exercise. Go and check price value of many different companies and also compare them within their own sector.